Welcome to Proven and Probable. This is Maurice Jackson. I'm delighted to have you here today. Before we begin, a couple housekeeping notes. Number one, today's information is not investment advice. Also, if you look in the description box below, you will see a registration tab for the Rule Symposium, which is in Boca Raton, Florida. That is going to be conducted July 7th through the 11th. Again, that's in Boca. That is the Rule Symposium. The link is right there in the description box. Also, August 22nd, Capitalism and Morality, hosted by Giant Bandari. The link is also in the description box below. Click on it and you can register right there. And finally, the last housekeeping note is that we're going to be interviewing the legendary Bob Moriarty tomorrow. And if you have any questions or comments, you can leave them in the description box here, on the chat box, or you can text me, call me at 855-505-1900. Now, what I wanted to share with you today was, well, we're in March Madness, right? From a basketball sense, but I actually believe in a financial sense. If you look at everything that is going on right now, this is epic in proportion from what we're used to seeing. You know, usually you hear the rhetoric that these events would take place, but now they're all coming to fruition. And coincidentally, as they're coming to fruition, and I'm referring to the tariffs and trade deals and talks of ending war and wars beginning, gold just reached 3,000. Now, I want to put everything into perspective, and I also want to make sure that when you are making an investment decision, that you're using logic and not using emotion. I want you to have conviction, but I don't want you to run off of emotion. And I want you to use logic. So gold hit 3,000, but we have to keep this in mind. Gold is a constant. The variable is the currency. And the fallacy is to think that gold is actually going up. Really, what's happening is that your currency is going down. And if you reside in another country, that currency as well is doing the same thing. You're seeing the price of gold go up, but the value remains constant. I had this past week as gold was reaching, well, let's backtrack for a moment. This past year, when I conducted a YouTube live, what I was doing each time when there was a new high, if you will, I came on and shared, okay, new high, here's the reasoning why, and what you can and should be doing. And again, what I'm conveying to you is what we are doing. It's not investment advice. But what occurred each time was new high, and then 3 weeks, it went down, and then up, new high. And here we are again. So the last time we spoke, we were basically at a new high, and then it dropped. Oh, Maurice was wrong again. Ladies and gentlemen, this is going to be a recurring theme, but I believe that the recurring theme is going to be moving faster and faster and faster. So the two questions I have for you is, have you realized or recognized this theme? And number two, what are you doing? Are you recognizing and are you acting on the information that's occurring? You know, so the last two, well, actually, since we last spoke, have you noticed the news, the mainstream news that is, the discussion of Fort Knox has kind of fizzled away, but gold still went over 3,000, and the mainstream media did not pick up on that really. It was just dismissed. Your opportunity is as a contrarian investor, because when you come into the natural resource space and precious metals, you're usually someone who's a heuristic, you're a critical thinker, and you're a contrarian. So your obligation, your goal is to recognize a sale, acquire what you can from that sale, and wait and let the market do what it does. And so the number of questions I've received is, what are you doing and what are you buying? And I always say, well, let's pause for a second. It's not what we're doing that's more important. It's what are you doing? And I want you to remember this, is that precious metals, whether it be gold, silver, platinum, or palladium, they are not a get rich quick, and actually not even an investment. For me, they are a savings. I do not have my savings I don't have a savings account, period, in any bank, any financial institution. I hold my savings in money, which is gold and silver, and of course, platinum and palladium, which is not gold, which is not money, but I hold my savings in metals, and I base my savings not on the currency valuation, but on how many ounces I own. And the beautiful, beautiful aspect about owning physical precious metals is that they are the most trusted financial instruments throughout recorded history. Every king, every dynasty, every queen, emperor, you name it, country, they have outlasted all of the above. So they're the most trusted financial instruments. They have never gone to zero, and they're analog. They can't be hacked, and they continue to do what they always do, is that they just sit there and everyone dismisses them in general, and then they come back to them. You're early in the game, and I want you to remember that thesis. It's not a get rich quick. Just do it as a hedge against government stupidity. The metals will do what they need to do, and I'm urging you not to go crazy and sell everything to get gold. That's not the premise of this whatsoever. Is to have a pragmatic approach, understand why you own it, and with the philosophy that you're looking to own as much weight as you can in any of the said metals. But I believe gold is the best value proposition at this time. Now, the question I'm receiving frequently is, Maurice, what's the best gold to buy? Well, 2 weeks ago, we had the St. Gaudens $20 gold coins. And I do use dollar in the correct term in that sense, because remember, a dollar is 371.25 grains of silver. However, the St. Gaudens coins, they were going for 49 over spot, which is actually theft. We should have been arrested for selling them that low, and you should have been arrested for buying them that low. That sale is over. So the best proposition for me is to purchase 1/10 ounce gold. And here comes the resistance. Wait a minute, I'm paying more per unit if I purchase the 10th ounce gold. Why would I not get a 1 ounce gold coin? And there's nothing wrong with getting 1 ounce gold. Absolutely nothing. But to me, I love divisibility, and it gives me optionality. So the delta, basically, if we're looking at a gold coin as of today, if someone were to call me, we have a number of options that 1 ounce gold coins are 85 over spot, whereas 10th ounce gold coins right now are going 35 over melt. Now, the difference between melt and spot, of course, spot is the 1 ounce denomination, if you will, in weight. So it's 85 over spot. Whereas if you're getting to fractional, you use melt. Melt is just the actual fractional value, if you will, and of the gold price or whatever metal price. So it's not 35 over spot, it's 35 over melt. So if I take a 10th ounce gold coin, let's just go with simple numbers here. Gold would be so 10th of that's going to be 300, and then 35 over. Just a rough number here. So a 10th ounce gold coin is going to cost me 335. Why do I want divisibility? In a hypothetical scenario, and I'm of the opinion that gold is going to continue on this trajectory to go higher and higher, I may not want to liquidate my position in a 1 ounce coin. If gold were to go hypothetical, I'm not saying it is, 10,000, 20,000, 30,000. However, I may only need 2,000. In that scenario, if gold goes to 30,000, then my 10th ounce is going to be worth 3,000. This gives me the opportunity right here to make a mortgage payment from a 10th ounce of gold, and I don't have to liquidate my entire gold position or a 1 ounce gold coin, because I may not want that currency. I don't want currency. I actually want to retain my position in gold, but I don't want to liquidate my entire position. So I have powerful purchasing power in a little guy. And conversely, as this price goes up, you will see demand come in. And when you're looking to liquidate that fractional gold piece or any gold piece or any metal piece in the future, as demand picks up, the premiums will go up. So when you're liquidating, you're going to make a higher premium as well when you sell in most instances. So the time to buy, it is now. If you don't own any gold, many of you watching own silver. I get it. You own platinum. I get it. My favorite metal, by the way. If you're looking to purchase silver, the question I'm also receiving is, what's the best silver purchase? Hands down, not even close, Mercury dimes. Mercury dimes are going for $260 over spot. However, it's the same as using that melt as we referenced before. So you're looking at $26 per face value. So 10 dimes are going to cost you $26. Mercury dimes, we're not referring to just Roosevelt or just any junk silver, Mercury dimes. And why Mercury dimes is very simple, ladies and gentlemen. When silver moves, junk silver premiums, they move. They correspond almost exactly with silver eagles. However, if you're looking for 1 ounce gold coins, I would say that silver eagles still, at this juncture, are the best proposition. But the premium, the spread is starting to move away from kangaroos. Kangaroos are my favorite 1 ounce gold, silver pieces, but the arbitrage is still there where I can purchase 1 ounce eagles. Right now is okay. And at a future date, as the premiums the spread moves, I will just use that arbitrage, and the spot price does not have to move. I'm simply waiting for the premium to move. I'm waiting for everyone to come in here and they want silver eagles because that's what's getting pushed everywhere. So they're going to want silver eagles. I will offload them and I will simply swap them out. I don't want currency, so I'm not selling them for currency. And the same goes for the Mercury dimes. All I'm going to do is use the arbitrage. I'm going to sell them and swap them out for silver kangaroos. So I'll own more ounces and the spot price didn't move. I'm going to let the market, the premium, dictate that arbitrage for me. We did this exactly 2 years ago. 2 years ago, silver eagles were 18 over spot. Today, they're 525 over spot. The spot price was 24 bucks, but the premium was 18 over. So you had a 75% premium. Kangaroos at the same time, though, were $4.99. Keep it simple, $5. Swapped out the eagles, got more kangaroos. So my portfolio grew in weight in ounces. And the same goes for Mercury dimes and or junk silver, but you're going to get a higher premium on the Mercury dimes. Now, in terms of platinum, my favorite metal, I am still a strong advocate for platinum. To me, it is the best metal to purchase overall. But in this market right now, this juncture, gold, I think, has the fastest upside. So you may see a delta occur between the gold-silver ratio and the gold-platinum ratio. It may actually move, and I'd like for you to take advantage of that. And then you can liquidate the gold, again, as that spread continues to move, and you're able to get some more silver and platinum right now. If you have any questions or comments, please forward them to me. You're going to call me directly at 855-505-1900. That's 855-505-1900. If this information has been valuable to you, please give us a thumbs up, leave a comment below. The YouTube algorithm loves feedback, and share this with someone that you love and that you respect and that you want to see them not just survive, but you want to see them thrive. Till next time, this is Maurice Jackson, wishing you and your family the absolute best.